Well, to discuss stocks, we have with us Rajesh Agarwal and Amar Singh joining in. Amar, first up to you. Do you think 9,000 is going to get taken out conclusively in today's day of trade?
Yeah, the way the markets bounced back and are trading firmly above the 8960, 8970 levels. So clearly reflecting that the market is inching towards the 9,000 mark, but that's a psychological mark, so there will be some profit booking also coming in. The trend, however, remains positive. So we'll have to watch out for if the market consistently sustains above 8985, 8990, then it's headed higher. And as far as the downside is concerned, 8930 to 8940 is an immediate level of support for Nifty.
At current levels, Amar, what is the kind of positional trade you'd initiate on the Nifty?
Yeah, at the current level, I would say that one should, if one looks at buying, then a dip towards 8970 can be used as a buying opportunity, because the upside, till the time the market doesn't take out the 9,000 level decisively and trades consistently above that level, there is bound to be profit booking coming at higher levels. So I would say that slight cautious approach should also be there. With the key support, as I said, 8930 to 8940 on the downside.
What about you, Rajesh? Fundamentally, is the setup looking good for a rally above levels of 9,000 today?
What I feel is 9,000 is just a figure if you look at Nifty, because once 9,000 is crossed decisively, people will be talking about 9,200 and vice versa. But what I would like to say is one should get out of the Nifty basket and look at the hundreds of stocks which have good opportunities lying here. Then out of the Nifty basket, you have a whole lot of mid-cap and other stocks where every day you are witnessing a kind of 5%, 6%, 8% kind of gain, where you have ample lot of trading opportunities. And for investment also, there are a number of stocks which are still very attractive on valuation parameters. For example, in the private sector banking space, we find a lot of stocks to be attractive. In insurance space, we find ICICI Prudential to be attractive. So I would like to say that we should stop looking at Nifty, because Nifty are already at 9,000 levels. There might be some board of profit booking or selling in the next maybe one or two trading sessions. And not to forget that the outcome of the UP election is looming large on our head. So maybe any negative outcome from that side would be a profit booking opportunity. But any downside in the market should be taken as an opportunity, because we are witnessing a lot of money coming from the FII side. Even DIIs who were sitting on a lot of money coming through SIPs, buying like anything. So all in all, the undertone is bullish. One should be cautious because it's trading at around 9,000 odd levels. But yes, there are opportunities outside the Nifty basket.
Right, that's the call coming in on the broader markets. Rajesh, if you just want to tell me what's going on with Tata Motors, 3.5% yesterday, another 3% rally playing out this morning. Brokerages continue to maintain a buy call on this one. Do you agree? Is this looking like a good stock for one to buy potentially, or even hold if they already have it?
As far as Tata Motors is concerned, this quarter numbers were bad, no doubt. But going forward, we feel this is one of the cheapest stock when we compare this to the peer group companies. And secondly, with a lot of new product pipelines in the JLR segment, good days are ahead. Even the current numbers which have come, we have seen total sales going up by 2%. Domestic sales was up by around 3%. And we believe that once the economic revival takes place, the commercial vehicle segments is going to move up very rapidly. Even on valuation parameters, considering the fact that other peer group companies are trading at a much higher valuation, we have a buy call on Tata Motors.
Right. Amar, technically, how is this one looking on the charts? Could there be a positional trade one could look at on Tata Motors today?
Yeah, overall, looking at Tata Motors in particular, technically it's still not very strong. Yes, what has happened is that it's got support around 435, 440 levels, and from there it's bounced back. But at the higher level towards 475, 485 range, that would be a range to watch out for Tata Motors, because there would be profit booking coming in around those levels. And if those levels are breached from the upside, then we could see it rallying towards the 510, 520 mark in the short term.
Right. What is your call on Walkard? Amar, do you have a stock call on this one? It's under some pressure once again, so it continues to make newer lows. And it seemed like the selling pressure had bottomed out, but clearly not. 5% cut on Walkard. What is your take?
The overall Walkard, there was a sell-off and there was a down gap opening today. And if you look at it, it's been very volatile. On 27th of February, it was up by almost 30 odd rupees, almost 4 to 5% rally. But it was not able to breach the 775, 780 levels on the upside. Whereas on the downside, yes, it continues to have support around 695 to 700 levels. So I see it trading in a range bound, because till the time it doesn't trade consistently below 695 levels, I would say that it's likely to trade sideways, because today also what's happened is that from the lows of the day it's bounced back, and it's up by almost 2.5% from the lows of the day. So clearly reflecting that this is in a trading range. Till the time we don't see it taking out 770, 780 on the upside, it would continue to trade in this range between 695 and 765, 770 on the upside.
Right. Rajesh, what about you fundamentally? Is this looking like a stock one could buy if you had to look beyond that FTA warning that's hit the company today?
See, around 700 levels, it's a good buy, because this has become an inherent property of Walkard. Every now and then, this kind of warning letters come and we see the stock going down, and again after some time it starts moving up. But as far as the current...
Right, gentlemen, stay with us. We're just going to cut across and see that address that Suresh Prabhu is making. Remember, it's all eyes on the action plan, the mini rail budget that is expected right now.
And for initiating several important forward-looking ideas which will help railways to regain the lost share of traffic. Normally, there is a power will thinking that normally a branch of a tree doesn't fall just like that. It is a process which happens over a long period of time, and then it happens and manifests at a particular given point of time. It's a long process which then ultimately culminates into a trigger when it actually happens. The same thing has happened in the freight traffic of railways. If you noticed, in early 1950s, even late 1940s, the railway had almost the only mode of transportation for traffic, 90% plus. It started sliding down all the time. Every year we are losing the volume. And then, obviously, we can say that we are having some growth. But if you compare with the total volume of freight that is there in the country, the railway was losing share constantly. Then the economic slowdown globally triggered even the more challenging times for railways globally. And I'm happy that Mr. Jamshed showed you the perspective. The largest rail transportation companies in the world, particularly the railways, they also lost substantial share. They had a negative growth rate. And in that context, we have to work out a strategy, because 2/3 of the revenue of the railways come from freight, and that too predominantly from 5 commodities, correct? 8 commodities. And therefore, when we have these challenging times that globally there is a slowdown, and when the global slowdown, it affects the transporter first, because imports and exports. When imports and exports get affected, it also affects domestic trade and domestic business. And the biggest sufferer is the transporter. So what is the transporter job? It carries raw material to the manufacturing point and uses manufactured products to the market, where there is a consumption, whether it's domestic market or global market. Why China has a negative growth rate for freight? and where it has impacted. The economic of Brazil, South Africa, Indonesia got affected because China's slowdown happened.
Well, railway freight stops seem to be coming soon. Suresh Prabhu still, of course, gearing up to address the issues and talk about what stops will be announced. But for now, talking about the issues facing the Indian Railways. Well, Amar, I just want to come back and talk about big movers today. And another stock that's catching our attention in terms of big gainers is the cement pack. So you've got Ultratech, ACC, Ambuja and Grasim all trading well. On the charts, which one of these looks like a good call?
Yeah, overall, looking at the cement stock, yes, we've seen some consolidation, but today has been a very strong day, and Ultratech has taken out its key resistance level. Earlier, it was unable to breach the 3,800 level, so it's trading above that, and technically also it's strong on the chart. So I would say that Ultratech looks definitely promising, and because once it's reached this 3,800 level, it's headed towards the 3,890 to 3,900 levels, and if that is taken out, then it's headed towards the 4,000 mark. So we have to see that the sharp rally which it has witnessed in the first hour of trading, that continues to hold. And yes, overall there is some upside definitely seems to be on the cement stocks.
Rajesh, fundamentally, which counter do you like in the cement pack? ACC, Ambuja, Grasim, Ultratech, any of these?
Ultratech would be a choice, and large cap space, and in mid cap we would like to go with Sri Cement. Both of them are doing well. I would rather say that the entire industry is going to do well in the coming days, going on the fact that infrastructure status has been provided to real estate, and a lot of stops are being given to the housing pack. With government initiatives on housing for all for 2022 and focus on infrastructure, I think cement would be the end thing. In the front line pack, we feel that Ultratech would be doing well in the second line, Sri Cement, with its whole lot of capacities and the kind of strong balance sheet it has. We feel even in these levels, it's a good buy.
Right. What about metals, Rajesh? This was a jack in the pack, very sharp run-up coming in for metal counters in the last 6 months. Even today is no different. I believe there is some supply curbs coming in on steel and aluminium from China once again. Keeping that trigger in mind, that $1 trillion spend on infrastructure by America, how would you approach metals? Would they still be an attractive buy? And if yes, in the metals pack, keeping valuations in mind, which ones would you go after?
Still screening bad, because if you look at the kind of performance you have given in the last 5, 6 years or 7 years, so what if we begin down to pulp, be it Vedanta, be it Jindal Pack, be it GSW, everything was down, and now it's trying to catch up with kind of demand coming out not only from US but even China is seeing some kind of demand revival. We have seen iron ore price moving up.
Right. Just give us a couple of minutes, gentlemen. We'll come back to you. But that's Arvind Subramaniam, Chief Economic Advisor, talking at the GST Summit.
To do this. So I think, but we have to recognize that capacity is a problem. You know, I've worked in government now for 2.5 years, fantastic people within government, but not enough. We need more and more talent. You know, for a country which has so many skilled people, it's surprising how deficient many of these skills are in different parts of government. So I think that, we need to build capacity in this. Second, I would say that, and this is something that, you know, I'm very keen for the Competition Commission. You know, it's been doing very good work. I'd like to see this, is that our system, our economic and political system, has still not developed the maturity to have finely calibrated interventions for problems. We have recourse to blunt instruments, bans, you know, restrictions, etc., etc. I think, especially in the area of competition policy, I think we need to have and something also the point you made, Mr. Sikri, that we need to have kind of nuanced analyses and nuanced interventions to, you know, wherever problems arise. And it's not easy. It's not easy at all. But there is something our broader political system has to mature before we can actually be able to do that. And I think that's very important. So capacity is important. I think using calibrated as opposed to blunt instruments is very important. Of course, all regulatory institutions should be independent, free from political interference. We know that everywhere. I think the government has gone at length to ensure, for example, in the case of the public sector banks, that it's not going to interfere in day-to-day decision making. I think that should apply to the Competition Commission too. But a last point, and I'll end on this, which I think in some ways for me is a kind of question in my own mind. If you look at the electricity regulation...
Well, that's Arvind Subramaniam talking about the open trade policy at the National GST Summit, I believe. Well, just coming back to a guest now, we were talking about a couple of stocks that were in focus, and metals is what Rajesh was talking about. Rajesh, you just want to very quickly give me your top picks in the metals pack?
No, metals pack, I would say one can go along with Tata Steel, National Aluminium, and Vedanta in the pack. I think these are quite beaten down. I mean, the kind of reserves, the kind of opportunities lying ahead due to infrastructure and housing boom. I think these stocks are going to give good returns despite the fact that they have already moved up quite a lot.
That's the fundamental call coming in a lot of these metal plays. Amar, what about you? Do you like anything in the metal stocks right now? Tata Steel, Vedanta, SAIL, Monitor Spart, any of those metal stocks?
Yeah, as far as metal pack is concerned, SAIL is a buy. Technically, it's strong on the charts, and yesterday also we witnessed a sharp rally. So any pullback towards 62 and 62.50 can be used as a buying opportunity, with a stop loss of 60 and a target of 66.50. And also Tata Steel, once it took out 485 levels on the upside, it's been on a rally, and technically metal stocks are still looking strong. So there is, I would say, room for further appreciation in the metal stocks, and Tata Steel could also, currently it's around 500 levels, so the next level for Tata Steel could be in the region of 525 to 530.
Amar, what are you doing with Jubilant? Again, good rally playing out on the counter, second day running.
Yeah, if we look at Jubilant Food, it has rallied significantly, and today it's up by almost 7%. And it has, if you look at the charts technically, it was in a consolidation phase for almost a month or so. I would say almost 10 to 12 trading sessions, because it was unable to breach the 1025, 1030 level. And today it's moved up sharply. Technically, yes, it's strong on the charts. And the next level of resistance somewhere would be in the region of 1125 to 1130. So there is still upside for Jubilant Foods.
Rajesh, what about you? Is that a buy call from you as well on Jubilant after the recent rally we've seen?
See, I would be a little cautious on Jubilant Food, because if you look at the last quarter numbers, our same-store sales was stagnant. There were pressure on margins and the high level like this. I think this stock has got headwinds going forward. Unless same-store sales go up, I don't think there would be much of an upside in the stock. Even on expected EPS, which is around 30 odd rupees in FY18, we believe that it's fully priced in.
Right, very lastly, Amar, I've got to wrap this conversation up. So if you can just give me your top trading picks for the week or in the next couple of weeks.
Yeah, there's one on Motherson Sumi. Motherson Sumi, that continues to remain positive, and the trend definitely is positive. So we see that once it breaches the 360 levels, it's headed higher towards 395, 400 levels. So any pullback towards 355, 357 levels can be a buying opportunity there in Motherson Sumi. That's one. And the second is Kotak Mahindra Bank. Kotak Mahindra Bank is also in a strong uptrend. However, it's unable to breach its November high of 833. So that's an immediate level of resistance. But once that is taken out, it is headed higher towards 860, 65 levels. So any dip can be used as a buying opportunity. Around 815 to 820 can be a buying opportunity with a stop loss of 795.
Rajesh, what about you? What is your buy calls this morning?
We had a buy call on Ajmera Realty and Arvind, and we think not only for today, even for the next couple of trading sessions, these two stocks are going to do well. Even a positional call on Karnataka buying would give good returns, although it has run up quite a lot, around 13-14% in the last 1 week or so, but still a lot of steam seems to be left in that.
Thanks for that. That's the call coming in on the big movers and shakers in today's trade. Thanks for watching. Up next, we will talk about the recent rally in metals with the manager of Kalyani Steel up ahead on Corporate Eye.